I still recall when I started working, and that's the time that I first had, financial conversations going on out there in the social media.
Yeah.
When I was in university, no one talked to me about money.
Yeah.
Everyone talks about career of choice. Everyone talks about careers that will possibly give you good money.
Why do you feel people don't get the assurance part of it? We get the insurance. It's really plain and clear, but the assurance side is a bit tough.
Insurance segment is supposed to be a major contributor to our economy.
Hi, and welcome to another episode of Make Money, the podcast. And today, we're about to talk about insurance and finding the place of insurance in investments. Now, for background purposes, a lot of people view insurance just as protection and not an investment. And that shows in the numbers. The insurance penetration in the country is shy of 3% of GDP, if you look at statistics from the Insurance Regulatory Authority. And with that basis, then, we want to find out what are the factors behind these and where do we actually place insurance within our lives and within the investment space. And I'm happy to have a guest who's all familiar, very much experience in this space. And Mr. Alfred Mathu, I think you have a large profile. I really then introduce you. You are a well-respected financial advisor over 28 years of experience. That's yes, quite... A child has grown to adulthood through that time. And you're also a top financial advisor. You work with Absa Life among many others. And I think the biggest for you is you are the life insurance agent for the last year 2024. You are the life insurance agent. So welcome to the podcast.
Thank you very much, Kepha.
And I would like to pick it up right from where we started. People are struggling, and before I even ask the question, I think it's good to set the context. When I started out, the first place I ever put money before we decided whether I was investing or I was insuring myself was actually a very short life policy of about 4 years that actually paid out and actually enabled me now to have that pool of capital that I was able now to start thinking about bonds and about other investment classes, equities and the likes. So I think the first question for me is, a lot of people say insurance is not investing. And there are a lot of debates. I'm sure if you were to have a debate like that on X, for my Twitter, you would have a lot of opinions coming your way. So I think to ask you, are they right? Is insurance investing or?
Thank you very, very much. I want to introduce myself first. Alfred Mathu is my name.
Yeah.
Very, very, very glad and privileged to be here this afternoon with you, Kepha, to have a conversation on money podcast. I am a consultant or an advisor with the Absa Life Assurance Company. Mm-hmm. And the Absa Life Assurance Company is an underwriting partner in this country that is majoring into all financial services, stretching from the short-term, medium, and long-term financial advisory.
Yeah.
When it comes to money matters, I think, as you've just highlighted, as a country, we've struggled. Currently, our numbers are playing the space of below 3% in terms of penetration.
Yes.
And you keep asking yourself, what could be the root cause for all these things? I think for me, one, the financial literacy ought to be a conversation for people in all levels, and especially at the entry. I still recall when I started working, and that's the time that I first had, financial conversations going on out there in the social media.
Yeah.
When I was in university, no one talked to me about money.
Yeah.
Everyone talks about career of choice. Everyone talks about careers that will possibly give you good money. Mm-hmm. But no one really went to the nitty-gritty of how do you manage your money.
Yeah.
So as we think about insurance today, I want to say that financial planning encompasses 3 levels of your planning.
Yeah.
The first level is where you do accumulation of your assets. The next level is where you grow the portfolio.
Yeah.
And the third pillar is what you call conservation or protection. Mm-hmm. Let me talk briefly about accumulation. You can accumulate your wealth contractually or non-contractually. A contractual avenue of building your wealth is where you get into a contract, knowing too well that I want to get into this kind of a plan, run for 10 years, it run for 5 years, it run for 20 years. The objective is to raise this kind of amount.
Yeah.
And every month or every quarter or every year, I'll be putting in this kind of a premium.
Mm-hmm.
That is a contractual arrangement.
Yeah.
At the expiry of the contract, of course, depending on the terms and conditions, you'll be paid back your money.
Yeah.
Or in the event of a death claim or disability, you'll be compensated. Mm-hmm. Or your family will be compensated.
Yeah.
Now, the second level is now where you have to grow your portfolio. Yes, you have put aside. How do you grow it? Mm-hmm. many people will have avenues that will either be the short-term avenues or the long-term avenues.
Yeah.
I'll be looking at maybe an avenue like a money market, which is a short-term avenue. You want to build an emergency fund, for example.
Yeah.
And you've decided to put aside a certain amount of money the next 1 year. And the idea is to build maybe an emergency fund with a threshold of 3 to 6 times of your monthly financial requirements.
Yeah.
Another person may be building the fund for educating the children.
Yeah.
And the children will go to school in maybe the next 5 years, the next 10 years. Again, that's a different platform.
Yeah.
Somebody else will also be investing or be accumulating with the purpose of building a retirement fund.
Yeah.
Maybe that is coming the next 10, 15 years. I think the whole idea and mechanism of knowing what particular financial solution to take at what stage is very, very important. Because at the entry point, I think everyone's agenda is to try and accumulate.
Yeah.
But as you accumulate, you are aware of the risks that you're exposed to. That between now and the next maybe 5 years, between now and the next maybe 10 years, what risks am I exposed to? 1, I could die.
Yeah.
2, I could get disabled. 3, I could get into critical illness.
Yeah.
When you think about such risks and you got that primary agenda that you wanted to achieve,
Yeah.
how do I then navigate through this journey to the 10th year, given that there are many risks on this path? That is not where the insurance element comes in.
Yeah.
And I actually wanted to give a clarity of 2 particular items.
Yeah.
There is what we call insurance and there is what we call assurance.
Yeah.
I don't know whether Kepha you've ever heard of those 2 terms.
I've heard of the 2 terms, and I know they are usually
and
mixed up a lot.
assurance.
Yeah.
When you talk about insurance,
Yeah.
you talk about risks that could or could not happen,
Yeah.
might or might not happen.
Yeah.
For example, sickness, between now and the next 1 year,
Yeah.
you might not even get sick.
Yeah.
You might not even get disabled.
Yeah.
But when you think about assurance,
Yeah.
you talk about risks that are definite. One day there will be death.
True.
One day there will be death.
Unfortunately, it's
And you might die
assuring.
before
Yeah.
you even get disabled or before you even get sick. So when you think about the insurance way, we majorly think about the short-term instruments that give security.
So your
the
motor
security-
vehicle
yes.
type of
For
insurance
example,
is the thinking.
the motor vehicle insurance.
Yeah.
Maybe you're insuring your business. Maybe you're taking medical insurance.
Yeah.
Those are generally the short-term investment, risk coverage options.
Yeah.
And you're looking at, if I get sick the next 1 year, if I get sick the next 2 months,
Yeah.
what would happen?
Yeah.
How about my obligations?
Yeah.
You want the insurance to come in and give you that cushion that if I get sick,
Yeah.
I will still be able to meet my obligation, given that I will not have to necessarily divert my own money
Yeah,
dealing
into
with the
that,
bills.
yeah, paying out
The
of
insurance
pocket.
company comes in and take care of the situation.
Yeah.
I'll give you a perfect example of a scenario that happened the other day, Kepha.
Yeah.
A mother of a friend of mine, at the age of 60, of course now in the retirement phase, just a few months after retirement,
Yeah.
got diagnosed with 2 terminal illnesses, and the 2 were diagnosed at the same time.
Yeah.
This lady ended up at Aga Khan Hospital, and she was admitted for 91 days.
Yeah.
Within the 91 days, her hospital bill shot to 37 million. Now, considering that this lady had just retired,
Yeah.
what happened then is that the retirement fund was paid by the former employer, which
Yeah.
I understand was not much.
Yeah.
Maybe you think about something like 5-10 million.
True.
It was not even enough to cover the bills.
True.
And at the particular point that you are retiring,
Yeah.
you don't have the much physical energy to go and start hustling all over the place to look for money.
True.
Now, in the process, she ended up selling her own retirement house, ended up selling her own car,
Yeah.
got the children involved in paying the bill, and they also ended up taking loans here and there to try and
Yeah.
help the mother offset. All that was not even enough. 3 fundraisings were done to try and clear the bill.
Yeah.
Where has that left the lady?
Yeah. You're
You
back
left-
to
left
you're back to zero.
Back to zero.
Yeah.
A fund that took you 20, 25,
20,
30
30
years
to build. Yeah.
has
It's
been
wiped
completed
out.
by only 1 risk.
Yeah.
So generally speaking, there are so many people in Kenya that are making effort to build their investments.
Yeah.
Unfortunately, if you build your investments in an environment where you don't have additional security to take care of you in the event of any occurrence,
Yeah.
then the challenge again comes your way.
Yeah. So you'll
So I
have
think-
to take out what you've built. You'll have to
Yes, to be
basically
protected
deconstruct
by what
again.
is this.
Yeah.
So
Yeah.
I think for me, people actually need to understand that insurance has got its own space. That
Yeah.
as build your portfolio, you have to be careful of the risks that you're exposed to.
Yeah.
Because you may work so hard and still not achieve the agenda because the risks on your path are likely to deplete the portfolio that you've built over the years.
Yeah.
So for me, the risk management and investment, they go together. You cannot separate them.
Yeah.
And if you work with one without the other, ultimately that would be a very shaky investment program or a very shaky financial position.
Yeah.
Because you'll get there, but because of a risk, you are
Yeah.
brought down. Again, you also don't want a scenario where you'll only take care of the risks and not take care of the
And not take
investment.
care of the investment. True. So there's a balance. There's a balancing
in our
act too.
industry, we call this the contractual investments that combine the insurance and assurance element.
Yeah.
That in the event anything happens to you, there's a payout.
Yeah.
If nothing happens to you, you still have
You
the payback.
yes, you still have the payback. You get back your
And
premiums.
that's
You're
the that again, I've
not
realized a lot of people don't
burning
seem to
money.
understand.
Yeah.
When we talk about a life insurance policy, people only imagine that you'll be paying premiums for a certain duration, and if nothing happens to you,
Then
you lose
nothing, it's
everything.
gone. Yeah.
That's
Same
not the
way.
case.
Yeah.
It will only be the case if you've taken a pure life insurance cover.
Yeah.
If you take a pure life insurance cover that has no investment element, then it means that you're covering the risks, and in the absence of those risks within the contractual period, there's no payout.
Yeah. Yeah.
But when you take the assurance and the insurance together, that in the event nothing happens to me,
Yeah.
I have this investment element that is also ongoing.
Yeah.
That element will actually pay you back with its profit.
You raise an important matter of distinguishing between insurance and assurance.
Yes.
I think insurance, many of us get it. If it's a car, I insure if anything happens to the car, it's a write-off, I'm paid.
Yes.
If it's medical, I have a card here at work. I present it at the hospital. I don't have to pay out of pocket. I'm sorted.
Yes.
But when it comes to the long-term plans and specifically life policies and education policies,
Yes.
like you said, these are assurances.
Yes.
You know, whether now or later,
Yes.
that's due to happen.
True.
And if you have children,
Yes.
you have to pay fees for them
That is
effectively. So why do you feel people don't get the assurance part of it? We get the insurance. It's really plain and clear, but the assurance side is a bit tough to get
I
for
think the
most.
literacy levels in our country have been very, very, very low.
Yeah.
And as I said, either traditionally from the backgrounds that we come, there's not much effort that was made those days to educate us on matters of financial planning.
Yeah.
A lot of us learned these things, at the workplace. And the information you get again is not sufficient. Some of the information that you get is also not accurate. Like there has always been a view out there that insurance companies don't pay.
Yeah.
And people believe that insurance companies don't pay.
Yeah.
For the 28 years that I've been working, I have seen countless claims paid, either on maturity, on death, on disability, and on critical illness. Every single month, I've got many clients of mine who are being paid against various claims. It could either be a maturity claim, it could be a death claim, it could be a disability claim, it could also be a critical illness claim, it could also be an injury claim. We've got all these benefits that are out there to ensure that you are well cushioned. So I think for me, the reason why we are where we are today, I think is majorly because of the financial literacy element.
It's lacking, yeah.
But I now know that there's a lot of effort that is being made by especially the regulator and most of the underwriters to get people as educated on financial matters as possible.
Yeah.
Because financial planning should be for everyone.
Yeah.
Not for specific people. But the understanding out there or the misconceptions out there are that financial planning is supposed to be for the rich. If all the people are not embracing financial planning, how are they going to turn their narrative around? Upside down?
Yeah.
Why should you get used to being poor? You can turn that situation around.
Yeah.
And the only way to turn it is by especially embracing the fundamentals that help people into building their securities.
Yeah.
Don't sit and imagine that where you are is where you ought to be. You can always change the narrative.
Yeah.
And I think for me, financial planning education is part of the ideas that will help us to turn the situation in our country, around.
Yeah.
Insurance segment is supposed to be a major contributor to our economy.
Yeah.
Unfortunately, looking at the statistics today, the penetration of 2.8, 2.9%, we are not doing much like other sectors.
True.
Again, because people believe that the misconceptions and myths around financial planning have actually let us down. I want to give some of the myths that people have. Some people think that they are too young. Others think that they are too old. Others think that they are too rich. Others think that they are too educated. There are all manner of misconceptions and myths around money. And these are the things that we need to get out of our way. Get more committed, get more purposeful in our financial planning, because financial planning is supposed to be an individual responsibility. It's not collective.
True.
The fact that your friends are not doing anything with their, with their money, does not mean that you also join the
bandwagon.
No,
True.
Don't join that. Do things your individual way because you've got goals. You perhaps have a family, you want to secure them. You've got children, you want to educate. I tell people that the moment a child is born, exactly 18 years from that date, that child will be going to university.
True, you know that.
How do you start putting your funds together to build a cushion that will be able to educate that child when the time comes.
Yeah.
You know, the moment you start working,
Yeah.
there will be a date of retirement.
True.
And a prudent person will, on the first day, start preparing for the last day.
True.
A prudent person will, on the first day, start preparing for the last day. Look at the people that have been disrupted by the withdrawal of aid
Yeah.
by America.
Yeah.
So many people are now
Millions.
going home.
Yeah.
They never planned for these things.
Yeah.
A lot of them were living very lavish lifestyles.
Yeah.
Huge car loans, huge mortgages,
Yeah.
children in very expensive schools. Suddenly, you're
gone.
thrown to the wilderness.
It's gone. Yeah.
Or you're thrown to the deep end of the sea.
Yeah.
How do you now navigate from that point? That's the reason why, even when you're doing so well, just know that in the event of a disruption, you need to have the cushion,
Yeah.
which is what people don't take care of.
True.
Even when your business is doing well,
Yeah.
even when at the place of work, you career-wise, you're doing okay,
Yeah. You still
please
need to think
can you
about.
build that cushion.
Yeah.
Because
Yeah.
you never know.
never
Tomorrow,
know.
circumstances may not necessarily be the today's circumstances.
Yeah.
Things keep changing. And that is the reason why I think for people, we should embrace financial planning right from the onset.
Yeah.
I always tell people that if you do not manage your money wisely,
Yeah.
unnecessary expenses will manage the same for you. And that is where a lot of people are.
Yeah.
In terms of financial personalities or money personalities, we've got 4 elements in our country.
Yeah.
The first element is a spender. These are guys that majorly spend their money on lifestyle.
Yeah.
They live in expensive rental apartments. They drive top of range.
Yeah.
A lot of times they are enjoying their moment using credit cards.
True.
These guys will eat out most of the time. They don't eat at home.
Yeah.
They would rather eat a Java or KFC every evening or
Can't
every
cook.
lunchtime.
Can't cook,
Their money
yeah.
is meant for today.
True.
The problem with such a personality is that the fact that they're not leaving cushion for tomorrow, in the event of a shift of financial circumstances,
Yeah.
that guy will come down to zero. That's the first personality.
Yeah.
The second personality, and who are also quite major in our country,
Yeah.
are guys that we call the dreamers. These are people who know the importance of financial planning.
Yeah.
They know that for you to achieve a financial goal, you need to start setting funds aside to help you achieve those goals. Unfortunately, they procrastinate too much. They start and end their financial journey in the dreaming. They'll never put their best foot forward.
Yeah.
They will never take the first step. These are the dreamers.
Yeah.
Let me go to the next category.
Yeah.
And that category majorly has most of the women, with all due respect, savers.
Yeah.
These are people who are very, very deliberate on putting funds aside
True.
to build the financial cushion.
Yeah.
The only challenge with a lot of them is that they are risk averse.
Yeah.
So they only leave their chunks of money in savings accounts.
Yeah.
The
Earning
problem with
nothing.
the savings account
Yeah.
is not earning anything.
Yeah.
Kepha, you imagine a situation where you are growing older, but your money is not growing older. The 1 million shillings that you had last year is still playing around
That's a
1
good
million.
one. Yeah.
And most of the people in this
So
space,
your money is still a baby.
most of the people in this space get their gratification from the bank balance. That
Yeah.
I had 4 million, it is still 4 million.
Yes.
No one has stolen my money.
Yeah.
That gratification is not enough.
Yeah.
You need actually progress from that level
Yeah.
to an investment conversation. Move money from a savings environment to an investment environment. And that's
Yeah.
the reason why we have now the fourth personality we call an investor. An investor is not defined by their bank balance.
Yeah.
An investor is defined by the way they relate and socialize with their money. For that purpose, an investor is going to be very futuristic. They're
Yeah.
looking at 10 years from now. They're looking at 15 years from now. They're looking at 7 years from now. They're looking ahead.
Yeah.
That's the first thing about an investor. The second thing about an investor, whenever it comes to investments, they are very diversified. They do not invest in one asset class. They invest in multiple classes so that they can reduce the risk exposure.
Yeah.
The other thing about an investor is that they study their risk appetite. They will not invest in any instrument until they are sure that it aligns with their risk appetite.
Yeah.
The other and very, very important thing about an investor is that they work and walk with their accountability partners. That you got somebody that is holding your hand,
Yeah.
who has been through this journey before, and they're telling you, avoid that, do this, do this at this particular stage. That should be your accountability partner. The person that understands your financial story inside out.
Yeah.
Okay? The final thing about an investor is that they're very financially disciplined. They never allow procrastination.
Yeah.
You think of things that you wanted to do with your money from last year,
Yeah.
and you've never
And yes.
started off the journey.
Yeah. You're still thinking
You've been
about
planning,
them.
you're still doing Excels, you're still doing analysis.
Yeah.
You don't have all the time to
Yeah.
analyze forever.
Yeah.
Yes.
Yeah. So Mr. Mathu, I think you've identified the problem.
Yes.
As we move towards, before we move to wrap it up with how to grow and how to correct what has been the anomaly or the sad bit about the country and insurance and its place within investments. There's something someone at the Insurance Regulatory Authority, told us once at a forum. It was a training, and they say first before I say what they said, it's good to appreciate the work put in by insurance agents. I think these are the people, a lot of people with insurance policies or something within insurances, because someone came to their workplace, met them in church, or somewhere even on the street and stopped them and told them, hey, let me tell you about these. And that's how a lot of the work is done. I was telling someone, if the stock market adopted the same strategy, perhaps we'd have more people investing in the stock market, because insurance agents have re-put in the work. Yes. Now, coming to what they said that insurance is sold and not bought. So ideally, unlike bread that I will go to either a Naivas or a Quick Mart and buy, you don't even have to advertise that bread. I'll come for it. You guys have to do a lot of the heavy lifting in terms of pushing this. I see a lot of insurance agencies. They want to know from your company, who can I speak to and come see some of your stuff. I'm trying to sell these, and I know a lot of people are avoiding calls by some agents, or they want me to add a premium, or they want me to add an education policy. I took a life with them. I'm trying to avoid them. I don't want to pick calls. How can we make sure now that we actually buy insurance, and it's not just a matter of selling that? I met Mathu. Mathu has insisted that I need to protect myself. I think because he's made a huge case for it, now he'll buy. How can we turn this picture that it's me seeking Mathu out and I need to secure this? I have a child who will join school in 2028 or 2029. Yes. I need to start thinking about how they'll get educated, whether I'm there or not. How do we turn that conversation from insurance is sold and not bought? How can we make sure that insurance is now being purchased by the people, and it's no longer you guys doing a lot of that heavy lifting we've seen?
Interesting, Kepha. This reminds me of a conversation that I had with the top financial advisor in South Africa in 2012. And the gentleman has since died. The guy was called Tabe Tube.
Yeah.
Tabe Tube was for the longest time declared as the top financial advisor in South Africa. And when I sat with this guy in his office, he actually summarized his conversation with me with the same words that you've applied now.
Yeah.
What he said, Alfred, after building my credibility and after knowing what I need to know and giving the best in terms of advice, I have stopped selling. They are buying.
Yeah.
That people actually literally walk from all corners of South Africa.
Yeah.
Durban, Pretoria, Cape Town, Johannesburg, to go and see Tabe Tube.
Yeah.
Because it was like a machine. Whatever advice that he gave was the best.
Yeah.
Our Kenyan situation is the opposite.
The reverse. You have to come make a case for what you're selling.
Literally pushing these solutions through the throats of people.
Yeah.
People still don't feel like they need them. In fact, a lot of customers or a lot of clients will look for insurance people when there are claims.
True. That's
not when circumstances are normal.
Yeah.
Today, when you hear somebody is sick and in hospital,
yeah,
the immediate imagination is that person has got a medical insurance.
Yeah.
And people are now getting a bit bothered when you start inviting them for fundraising.
True.
If your car is involved in an accident, the interpretation basically in Kenya is that you have got a motor vehicle insurance.
Yeah.
And a comprehensive one for that matter.
Yeah. So
in as much as most of the people are on that party, the interpretation by most of your friends is that I'm sure Kepha has got a good insurance.
It's a write-off they'll pay.
If you got involved in any injury, they would always assume that you got a personal accident cover.
Yeah.
Let me tell you what. There are some certain efforts that have got to be made at this particular point to be able to polish the process end to end. And one of the things for me, financial literacy conversations need to be introduced in schools.
I agree on that.
Right from the entry, people should start appreciating money and financial planning.
Yeah.
When I was a young boy, my mom and dad discussed about money in the bedroom.
Yeah.
I never had the privilege of hearing what they discussed about their money.
Yeah.
I learned about money when I started working.
Yeah. I think it's a lot of the case for many of us. You just saw.
That is quite late. With my children, I've done it the other way around. I started talking to my children about financial planning and about money many years back. In fact, when they were in primary school. Now that I've got some of them working and others finishing university, I think all my children have money market, for example.
Yeah.
None of them does not have a personal accident cover. The rest depend now on their current financial status. Some have taken their own personal investments. Yeah. Others have not. Yeah. Of course, depending on where they are on the trajectory. Mm-hmm. But we need to introduce these conversations to people where they are young. Yeah. That's the first thing. Yeah. The other thing that I also want to say is that as a country, we should start creating better environment that will allow financial conversations. You see, like when you hear that the Kenyan stock market has come to near its knees a few years back, that kills the enthusiasm of people to run about financial planning.
Yeah.
Because I say, hey, I think as a country we're struggling.
Yeah.
I saw somebody putting some publication that was maybe inaccurate the other day that banks are on their knees.
Yeah.
What kind of a signal do you think people are sending such information that is
Yeah,
not
they're
well
telling us,
founded?
get your money out of
They are just
banks.
making people scared for nothing.
Yeah.
Other people don't believe that you can invest in government instruments. If there's a way to make money right now, it is through the various government instruments.
True.
There are people who are still very skeptical.
Yeah.
You talk to people like myself who have actually tried it, I will tell you it's one of the best.
Yeah.
That you accumulate money from an insurance program.
Yeah.
Now when you have a lump sum, can you
Go
direct
and-
such into non-construction investments such as the infrastructure bonds?
Yeah.
The fixed bonds.
Yeah.
And that's a very lucrative avenue. Whereas a lot of people are still skeptical.
Yeah.
Those that have invested in these platforms, they are making a kill.
Yeah.
Interest had actually, for most of the infrastructure bonds, had gone to as high as 19%,
Yeah.
20%.
Yeah.
A lot of people never took advantage of this because they are still thinking that the government might not pay. I don't think you've ever had such an experience.
Yeah.
And even if you ever had, investment is a question of taking a bit of risk.
True.
But
It's
put your
always
money in the
about
right
risk.
place.
You have to take risk.
got
Yeah.
to
If
take
you
a
want to
bit of
invest,
risk.
you
The safest place
Yeah.
is not on earth.
true.
It's only in heaven. Because even keeping money in your house is not
Yeah.
safe enough.
Under the mattress, the house could burn
I
and
tell
your
people
money
that
burns with it.
I tell people that playing it safe is
Yeah.
also unsafe. Playing it safe is also very unsafe because people chose to play it so safe. That's why they never give some of their money into some of the instruments that I'm talking about.
True.
And because of that, they lost the opportunity to make the kill that some of the people made. Those that put money in the infrastructure bonds at the point 20% was the yield had a big kill. Where else could you have made such profits?
Nowhere.
In fact, some people are even prudent that they took loans with their circles at a rate of 12% and locked the same infrastructure bond
At 20%.
At 20%.
They're making
That I
the
thought was
difference.
wise.
True.
Maybe the other thing that I also want to mention here is
True.
we should start having incentives on people that are doing things correctly. Companies that are doing things correctly.
Yeah.
In as far as educating the public is concerned. Let's have incentives for people that educate their staffs on financial planning matters. I'm always invited to go and speak to young employees in organizations. Like now I've got a meeting coming up on Monday. I'll be speaking to the staffs of USIU, lecturers, senior lecturers in the university. Basically to go and empower them because some of them don't know these things. Empower them. The person may be having masters and PhD in a particular course.
And they have the money, but
they don't have
know
the same
where to put
in
it.
financial
True.
literacy. So I need to go and impact them on financial planning, awareness, and to get them to start doing financial planning in the correct way.
True.
Because a lot of them are not. Finally, I think for me, the outreach system has been very, very poor in Kenya. Who sells insurance in Kenya? Only the agents.
It's
I think
it's
this is
only
about
the
time that
agents.
people start building partnerships.
True.
Partnerships. You can collaborate with organizations that when you buy this kind of a product, you'll be able to enjoy, for example, a personal accident for the next 6 months without paying any extra money.
True.
When you pay with your credit card, maybe you're also going to enjoy maybe a medical insurance for the next 1 month or 2 months or 3 months. People actually need to be motivated even more on issues of financial planning. Let's not just sit and assume that people will learn from their own way. I think more interventions actually need to be put in place to get people to learn these things.
All right, great. A final one from me, Mr. Mathu. For someone listening and they wonder, I've really taken some nuggets from that conversation. Put it simply.
Yes.
Someone who has no insurance, but they now see the pros of getting these. Why should someone go out there and actually consider, even if they're not buying it today, why should someone consider insurance within the investment journey?
One thing, Kepha, I want to tell you that these days I'm more, because I'm a financial coach. I'm a consultant and I speak to people about money matters. People are even able to follow me. Like for example, if you want to see what I do, you can actually dial on my USSD code *482*72#. And there's so much information that you're going to get from there. That will give you access to me for free, just for me to be able to give you advice on investment from the particular stage that you are. I'll be able to tell you if you are financially healthy where you are, and if you are not, what remedies you should put in place. So if you can dial that *482*72#, you'll be able to get this free advice. That's point number one. The other thing that I also wanted to mention here is that we've got enough players in the market. We've got enough financial advisors in the market.
True.
They are doing the same role as I'm doing. And they actually hold your hand literally to walk you to a solution that will be able to cover the kind of situation that you're exposed to. Whether you are an old person, whether you're a young person, I think we got enough out there in the market that will actually be able to lead you to the solutions that you need.
All right.
Yes.
All right, Mr. Mathu. Thanks so much. That's all the time we could have, but we really appreciate the conversation. I think now you've re-put the place of insurance within investment so that it's no longer the conversation, does insurance and investment fit in the same sentence? Can they even be mentioned alongside each other? So we appreciate you for being on the podcast, and we look forward to even having you more on these conversations as we also try and add insurance to also the conversations that we do get here on the podcast. So that has been Alfred Mathu, a long-term and successful financial advisor for that matter. And thank you for being on the podcast this week.
Thank you. Thank you very much.
Appreciated.
We say that no one wakes up to fail. People only fail to plan.
All right.
Thank you so much.
Great. So that has been Mr. Alfred Mathu, I guess, for this week, and he's put insurance in its place within the investment landscape, and that has been another episode of Make Money the podcast. Till next time, bye.